Order one of these little booklets.
Order one of these.
Have you got one of these?
Order one of these. Have you got one of these? Order one of these. Have you got one of these? Order one of these. Have you got one of these? Order one of these. Have you got one of these? Order one of these. Have you got one of these? Order one of these. Have you got one of these? Order one of these. Have you got one of these?
I've just had the good fortune of meeting Kay down the front here. Kay, can you stick your hand up just for everyone? So we've got a number of the personnel from Canaccord here. Richard's here, Peter, Craig, Simon and Kay down the front here. So if you're looking at something and you're thinking, I'd like to invest and I'd actually like a little bit of assistance, if you have a chat with Kay and her colleagues, they'll be able to point you in the right direction as well. All right, I think that's us at the moment. You ready for this, sir? Right, so you know the terms and conditions. You have 15 minutes. I ring the bell at 2 minutes. I stand up at 1 minute, and then I'll be standing very, very close to you. But you're good. You're you take your chances, eh? You're a pro at this. Let me introduce you first. Alicanto Minerals is our first presenter after lunch today. They've demonstrated the value-enhancing attraction of brownfields polymetallic silver, zinc, gold, copper, lead exploration at the Salva Silver project, which is 120 k's from Stockholm. Our MD is Peter George, and he's up here to tell us about the exploration progress. Would you please make him very welcome?
Great, thanks very much, and thanks to RIU for putting on this event, and thank you for everybody for turning up today, and also everyone online who's tuning in. I'd just like to give you an update on two sleeping giants, really. These were giant projects that have been coveted by Swedish kings going back centuries, but been all but forgotten about. So we've got both brownfields and greenfields exploration opportunities in the company, in probably one of the most mineralised places on Earth, which not too many people would have heard about. But I really hope that by the end of this presentation that really would have convinced you that what I can see with the potential near-term upside as compared to our current market capitalisation at Alicanto is immense. Just quickly on the disclaimer, obviously that's on our website, but I'll draw your attention to the forward-looking statements. Chasing Swedish giants, as I call this slide. The four things I really want you to take away from this. As I mentioned, so two very high-quality projects in a Tier 1 location in Sweden with historical high-grade production. So we've been working at the Greater Falun project for a couple of years now, had some really good success with high-grade hits, re-engineered the geology in that part of the world, and you know, looking forward to some real success, probably more next year, as we've also now got our Sala project, which is more the focus of this presentation, where we're currently drilling and heading towards our maiden resource in the coming months. The right team, very experienced with recent success. I'll show you a slide of who that involves in a minute, and you'll recognise a few people. Underexplored region, forgotten deposits, and first mover in the region. And I can attest to that. Look, I've spent 6 years working up in that part of the world for Boliden. When I lived up there, speak fluent Swedish, so I understand the upside potential of what we're looking at up there. And of course, we're drilling underway at the Sala mine, maiden resource in Q1 2022. And just a little photo there of what we're looking at in some of the most recent core that we've pulled out of the ground at 41% zinc, 17 grams per tonne silver, which is some of the highest grade zinc that I've ever seen. I think the best I've ever mined is about 25% zinc. So just quickly on the corporate snapshot, 328.9 million shares on the register, market capitalisation of around about the $50 million mark, $3.2 million in the bank at the end of August. We're fully funded through to delivering our maiden resource in next year. Substantial shareholders, Steve Parsons, who's also, you know, you'll see him as one of our corporate consultants supporting me massively, of course, of the Bellevue fame. Board and management controlling about 13% of the company, and yeah, just massive support to me. Board and management, as I suggested, you'll see a few people in here that you recognise. Obviously, Ray Shorrocks, ex-chairman of Bellevue and currently chairman for Alicanto and Orteco. Steve Parsons in there, obviously, as our corporate consultant, but also Didier Mercier, Michael Naylor, our current director of Bellevue. But perhaps not as well known will be myself and Erik Lundström, Erik being our ace in the pack in Sweden, ex-chief geo with Leedman, having 6 major discoveries in his own right, now working on his 7th currently for us. So Sweden, a tier 1 mining jurisdiction, and I appreciate that there won't be too many people here that will know too much about it. I guess I could call myself a bit of an expert, having spent so many years working both up there, but also in Australia, being a Kalgoorlie boy from birth. But jurisdiction-wise, it's one of the best mining locations in the world. And I've operated in both locations, very easy. Tier 1 infrastructure, roads, rail, everything you can possibly ask for, deep water ports, cheap power, fresh water, free, and a workforce that's very, very well educated. But not to mention the prospectivity. In Sweden itself, you've got probably 3 major mining areas. Up in the north, you've got the big iron ore mines up in the north, and then you've got the Skellefteå district, where they've got a few big BMS projects up there. But our area of focus is really around the Bergslagen area, and as I said before, it's one of the most mineralised places on Earth. Very famous amongst geologists, and I can back that up with, there's really 4 major projects in there, 2 of them of which are now closed, which Alicanto now controls. But you've also got the Garpenberg project owned by Leedman, currently 90 million tonnes in reserve at some pretty good grades, and they're having produced over 54 million tonnes so far. And of course, the Zinkgruvan mine, who some of you might remember once being owned by North, 47 million tonnes in reserve, and also some very impressive grades as we go forward. But I'll talk a little bit more about Sala and Falun as we go. But as far as relative valuations are concerned, projects in Sweden are massively undervalued relative to what we would see in Australia. So if we had the projects that we have here, they would have already had 100,000 metres worth of drilling put into it and probably mined out 50 years ago. This slide here, it's a relatively new one for me, but what it shows is chasing giants, global polymetallic deposits by past production. You've got some big ones in here, obviously at the top of the list being Broken Hill, with a huge amount of tonnage being produced, over 200 million tonnes in its history. But you can also see there in the dotted lines, you've got the Garpenberg deposit, Falun deposit, Zinkgruvan and Sala, all of those sitting within the top 30 or 40 projects around the world, rated by production, and we control 2 of those. 2 world-class projects. Now I'll zoom in a little bit on the map there. So at the top, on the top left, we've got the Greater Falun project, where we've focused a lot of our efforts over the last couple of years. The Sala mine down there on the bottom right, 120 kilometres by road and rail from Stockholm. But sitting smack bang in the middle of that, you've got the Garpenberg mine, which as I said before, is nearly 30 years worth of production in front of itself at very high grade. And then the deep water port over it, yeah, but not that far away as well. But in my world, grade is king. We've got multiple targets for immediate testing. We've got over 14 targets at Greater Falun that we've been looking at. Hit some very high grade, haven't hit the widths that we want to yet, but we're only a drill hole away from that. But at the moment, our main focus is on the Sala silver zinc lead project, and I'll go into a little bit more detail on that in the coming couple of slides. But we committed to producing a maiden resource there in the first quarter of next year. The depth potential of the Bergslagen region, again, where we are, and I think you'll start to see a bit of a pattern, with obviously a lot of the Bellevue team involved in what we're doing here. We take unloved, forgotten projects and bring them back to life again, and Bellevue is a classic example of that. And we see exactly the same opportunities at Sala and Prince together there. Sala itself was only ever mined down to 290 metres. They stopped mining it in 1908 with an average grade of 1,244 grams per tonne silver. They pulled over 200 million ounces out of this thing over about 400 years. And there's no drilling underneath it. It's open at depth and open along strike in all directions. And these are some of the intersections that we've hit here. Well, if you're interested, we can talk a little bit more about those at the booth. But we announced today 87 metres at 40 grams per tonne silver and 5.3% zinc. And as an example, I mined approximately 5% zinc over about 20 metres width at the Petignäs mine in northern Sweden. So these are definitely all grades in my world. Unlocking the potential of the Sala project. So this is the Sala project in plan view. So on the the blue blob, I guess you could say there on the top of that. Sorry if I can get that to work there somewhere. Can't see with my glasses, but that particular area there, that was the Sala mine, as mentioned, only mined down to 290 metres, only about 500 metres of strike. We have the Prince Lode, which is only 300 metres away, where we've got a very similar strike length with depth of about 500 to 600 metres so far, open in all directions with strong mineralisation. A mineralised zone over 250 metres wide with some phenomenal hits in it, as I mentioned before. Multiple stacked lodes exist within this particular area, very high grade intersections, but also wide intersections. So I don't know, what this is going to be as far as mining is concerned. It could be a high grade mine, or it could be a bulk mine, or it could be a combination of both as we go forward. All owned 100% by AQI. We're not in any joint venture partnership with anybody else. We don't owe anybody any money on the project, so it's 100% ours. We currently have 2 drill rigs spinning with a 3rd rig ready to go. And as I mentioned before, maiden JORC resource anticipated next quarter, and open at depth and along strike. So this is the, just go back quickly, as I mentioned, so that's the 500 metres of strike where you've got the Prince Lode. What we see here is the same thing, but in long section along that 500 metres of strike. As you can see here, there's some serious intersections in here. There was the 87 metres that I mentioned earlier, but on top of that, there's intersections as wide as 37 metres of 50 grams of silver, 6.1% zinc, 0.3% lead, 15.9 metres at 157 grams of silver, 4.2 of zinc and 0.6 of lead, stacked next to each other, separated by small areas of waste. So from a mining point of view, very exciting and probably not that hard to mine. Moving on to the next one. So from a highlights perspective, we've only had the Sala mine. I think we announced maiden drilling starting on the 1st of May this year. We only announced that we actually picked up the project, I believe, in February, March of this year. So far, around about 11,000 metres of drilling completed during the year. We had a massive boost for that project this week. So we've managed to get hold of a data set out of the Swedish government, which has never been made publicly available. And that's actually cut around about 5,000 metres out of that maiden resource drilling program, which we're just going to bank straight into our phase 2 or stage 2 and stage 3 drilling program, which is testing the extents and stepping out from the target area that we can see there already. So super excited from our point of view, because that gives us a head start on everything and saves a huge amount of money for our shareholders. A work plan going forward. Stage 1 inferred resource drill out that we're currently doing at the moment, we expect to have that finished by December, all things going well. As mentioned, we've had the bonus of the data that we didn't see before now available to us, saving us a huge amount of money going forward. We expect to have the maiden inferred resource coming out in the new year, but we're not going to be stopping there. We'll continue working towards things as we go forward. And just our last slide, I guess, look, just really exploiting our competitive advantage. As mentioned, so from a historic production perspective, there's over 200 million ounces of silver produced at Sala at some mammoth grades. They had their best that they pulled out of the mine came out at about 7,000 grams per tonne. We had a hit in the last announcement of 6,812 grams per tonne silver. If you back calculate that to gold, which I'm not going to tell you what it is, but it's a lot of gold. But we're seeing quite narrow intersections, but we're also seeing massive wide intersections as well. So it's going to take us a little bit of time, but we'll get our heads around exactly what that means and how you can potentially mine this thing. Potential large discovery. Look, polymetallics, these are all weather ore bodies. When zinc is up, silver might be down. Lead might be up, silver might be down. Who knows? All might all be up all at the same time. It creates a massive amount of income for these types of projects. News flow, with 2 rigs spinning, 3rd rig ready to go, maiden resource early in the new year, open at depth and along strike, plenty of scope for expansion. We see an awful lot of tonnes here potentially in front of us. Very strong team. As I mentioned before, this team has done this before. We're going to do it again. But I think, really, if I can leave you just one thing to think about, do your own research by all means, but have a look at current market capitalisation. We're sitting around the 50 million tonnes. In my opinion, we've got an awful lot more potential mineralisation sitting down there in the Sala mine, and then it's all open in all directions. So, the potential for a re-rate is significant. Thank you very much.
Thank you, Peter George, and thanks for kicking off our section after lunch as well. Any of you in this room who actually wear hearing aids? Anyone who wears hearing aids? I do. I got them a couple of years ago. Probably in my industry with headphones all the time, it was kind of inevitable. I also remember going diving once and someone was dynamiting for fish and that blew up next to me. That didn't do my hearing any good either. But there are a large number of us who will need something to help us in our hearing as the years go on. So our next presenter was of extreme interest to me. And Time magazine, for those of you that read it last year, named a Little Perth company, in its top 100 inventions in 2020. What we're about to hear about is something that's very little, but its potential is absolutely massive. And this fellow here is Justin Miller. Justin Miller is the MD of Nuheara and one of the inventors of the product that we're about to hear about. So please have a listen.
Thank you, Katrina, and interesting to hear about your story. I'll catch up afterwards, I'm sure, and discuss your hearing loss in a little bit more detail, because hearing loss, unfortunately, is something a lot of people choose not to talk about and ignore, and that's part of the reason we're here today. We've become hearable pioneers, and ultimately, what does that mean? Well, back in 2017, when we released our first product, it was all about trying to create something that sat between a headphone and a hearing aid, and that has now grown to include a multitude of products, iterations of our product that essentially has built more and more towards providing self-fit and a consumerization of hearing for an individual. The process for people to go through today is a very time-consuming process, very expensive process. And from the outset, our ambition was always to bring product to market that would allow people to take the first step along the hearing healthcare journey themselves. And if you think about all aspects of hearing or healthcare in general, there are many things that you can take the first step on. Hearing is generally not one of them. So we set about developing a set of products, which over time has got better and better. It brought the likes of HP to us, where we were able to build product for them over the course of the last year. Really yet to see anything come other than the development of that product yet. We've shipped our first products to HP. And this year, in a matter of a week ago, we finally got the regulation change that we were looking for in the US, and that's allowing us to really pursue, without fear or favour, the hearing aid market. A little bit about our history. I mean, last year was a really breakout year for us. We've gone through the ups and downs of trying to find our way in this particular market. We are creating the category we're selling into. There's nothing that exists between a premium headphone of a few $100s and the many, many thousands of dollars it costs for a hearing aid. So we've been through it. We've built traditional retail. We've pivoted back to help consumers through the hearing healthcare journey by building a direct-to-consumer retail model. And then we've had COVID, which was almost something that stopped us from manufacturing and nearly stopped our business. But ultimately, with hearing clinics closed and our self-fit capabilities coming to the fore, we actually grew. And last year became, from the depths of COVID, was a breakout year for us. 85% of all our sales are international. So we're not just domiciled, we are domiciled here in Australia, but most of our sales sit outside of this country, predominantly in the US. We've had highly successful sales campaigns. We've developed HP, and we've seen a recovery now in brick and mortar, and that's happened particularly in this quarter. And I want to get into that because we just released our quarterlies today, and it was a very significant pivot out of COVID from our direct-to-consumer model into traditional retail. And we're preparing now for further scale as medical device company with our clinical trials commencing a matter of weeks ago. Very quickly, if I can touch on our results, the one thing I do want to point to in our results for this particular quarter, yes, we had good year-on-year growth from a cash receipts perspective, but with Australia remaining in lockdown, our direct-to-consumer in Australia remained, excelled. What we saw in the US quite rapidly was a softening of our direct-to-consumer, which is eyes on screens, and a massive return to traditional retail. And our ability to have our products within the Best Buys, within the Walgreens, within these big retailers in the US has been pivotal in our success through this particular quarter. And it's something that happened very, very rapidly, and quite thankfully, we've invested over the last 5 years in the development of those channels to allow us to appeal to the different propositions presented to us. We had a strong quarter, as we say. We actually chose to put our pricing up in the last quarter. We've seen our ASP increase to $478 from a last year average of $405. So it hasn't impacted us too much. We took that opportunity. Supply chain, logistics, components, everything's gone up. We took that opportunity and it's paid back in spades over the course of the last quarter. And we've been able to maintain those 50% plus product margins, gross margins, as we move forward. And you'll see a lot of other things going up, I would expect, over the course of the next 12 months as supply chain issues really hit. We've got a strong balance sheet and we're investing to continue the growth trajectory. And we've did this quarter, the October to December quarter is pivotal to any consumer retail company. We're prepared. We've got thousands of units in warehouse. We pre-prepared through the supply chain issues. We've built our products and we're ready to roll into this particular quarter. We're continuing with the R&D investment. That's particularly around our status now as a medical device, and we continue to do that affordably. In terms of the hearing aid market and the opportunity, just to briefly touch on what we're about and why we're here. 20% of the global population have hearing loss. Majority of that sits in the mild category. In the moderate to profound category, there's over 400 million people there. But hearing loss, people with devices, there's only 17% that have actual hearing aids. So 83% of that particular market today choose to do nothing about it. And the gap range is not just in third world countries, it's in every country. So that gap range is as high as in Europe as it is in Australia and the US and others. So, and there's negligible penetration at the mild level. So when you first start to develop hearing loss, which is about 35, the average age of a hearing aid wearer is actually 72. So there's decades where we're choosing not to do anything about it. And that's our position, sell innovative products with self-fit technology to meet the varying needs of consumers. Where do we fit? We've spoken about the upper end of the headphone market, but also in terms of where we fit with hearing aids in the market. The average price of a hearing aid is $5,000 a pair. That's average. They go well and truly beyond that. What we're attempting to do is deliver those hearing aid functionality, deliver the headphone functionality, and fill that smart hearing gap. And that assistive hearing devices, which are expecting to be sort of 50 million device shipments by next year, with an indicative ASP of somewhere between $500 and $1,000 is a very, very big market. So there's a really big potential market there. And with what we're seeing in legislation changes, it's hotting up for us. How do we fit? Well, the unregulated hearables at the bottom end of that market, sub $500 price point, low budget. We've delivered our max into that very well. We've taken on OEM opportunities that allow us to penetrate with bigger brands, with cheaper products and deliver personalization to people that wouldn't normally access it. But this is where it gets exciting for us, our movement into the regulated hearing aid market. So we can push up from a price perspective. We can offer a lot more sophistication without adding a lot to our cost base. So from our perspective, it represents high margin opportunity for us, but still well and truly under what the average price of a hearing aid solution is. And importantly, it's self-fit. It's allowing people to take control of their own hearing healthcare journey. So Nuheara enters the hearing aid market. We've bashed on the edge of regulation for a long time. But there's a number of barriers that we've had to overcome in the last 7 years. The first is technology. It's hard. The ear is hard. There's 5 companies that hold 90% of the world's hearing aid market. And they hold it very well, and they hold it very tightly. And not only do they hold the technology, but they also hold the distribution. So it's very difficult for an emerging player to actually embed itself into a global position, because those hearing aid companies actually own more than 50% of the hearing clinics that you will visit. Not that they're named the same, and they do that on purpose. But there is the fox running the henhouse here, and that's what we're here to disrupt. And the last point is regulation. It's a really difficult area to actually execute. But we've overcome that. 7 years of R&D, 3 generations of product, we've proven our technology. Distribution, we've broken it down. We've delivered direct-to-consumer self-fit hearing devices, and we've built retail relationships with some of the biggest retailers in the world. Best Buy, the Walgreens, so we built that distribution. The last bastion for us, and we've been waiting for this for 4 years. This got passed down literally a matter of a week or so ago, was the OTC hearing aid legislation. And that's an over-the-counter hearing aid legislation that effectively provides a regulation for us to provide self-fit hearing aids into the market without fear or favour of regulation. So for us, what does that mean? I think I can go backwards. Yes, it's a new hearing aid category. It levels the playing field with the 5 big hearing aid companies. They are all now required to go and do clinical trials and 510K submissions for their hearing aids. For us, we've got deep retail experience. So those over-the-counter hearing aids have to be sold somewhere, right? We've got 5 years of hearing retail experience. Hearing retail for everyone else is very much an oxymoron. So we've developed good technology, we've developed good hearing relationships, and we've had our self-fit technology out there for a long time now. Our clinical trial is currently underway. So the key takeout points from here are that we expected to finish our trial early in 2022 with the submission shortly thereafter. And the pathway we're following, and we're following a Bose predicate here, is that we'll file a 3325, which allow us to get into the game and selling our self-fit hearing aids well in advance of the OTC, which will only pass into September of 2022. But the 3325 will allow us to actually a smooth transition into the OTC hearing aid category. So breaking down the barriers very quickly, traditional hearing aids, high stigma, high cost, highly inconvenient and non-scalable. Our hearing buds, low stigma, everyone's wearing something in your ear today. That's the thing that's changed. We're a situational product. We're not designed to be worn all day. They're low cost, they're highly convenient. Self-help, it's an empowering process, they're home delivered, and it's highly scalable. This is our winner, the scalability of what we offer. There are not enough audiologists in the world to even come close to servicing that billion plus people. It must be self-fit, and that's what we'll drive. And with regulation now in our back pocket, that's how we will succeed. So very simply, our technology service model, it's simple, it's convenient, it's 3 days versus 3 months. It's empowering, it's personalised, it's scalable, and it's affordable. That's where we win. So our key priorities for the next quarter is maintain our direct-to-sales growth, broaden our geographical reach, and continue to improve the sell-through through our traditional retailers. Seeing what's happened in the US, there's more exciting developments to happen in that part of the world. As they've come out of COVID, the opportunities now that are presenting themselves, particularly with the legislation changes, are deep and fascinating for us. We will look to increase our OEM. So HP have had some supply chain issues with what we're being bundled. Our aim and our ambition is still to push product out with HP. New hearing aid product developments, and importantly, our omni-sales channel. So our direct-to-consumer, our traditional retail OEM, have them deliver all at once in the same quarter, we'll see a re-rating in our particular business. So with that, please come out. We're out on the booth. If you want to understand more about what we're attempting to do, what we're driving from here in Perth, Australia, is global change. And it's significant, it's profound, and we're very proud of what we do. So thank you very much.
Brilliant. Thank you so much, Justin. I've got 1 minute up my sleeve from your talk. I just want to say I hosted yesterday in Perth the Australian Alzheimer's Symposium, and one of the big focuses there was hearing and the incidence of people who have hearing loss and they don't treat it, and the correlation to dementia and Alzheimer's is quadruple. It's massive. So if you are a person, this is my public service announcement to you all in this captured room today, if you've got that mild hearing loss, have a chat to the guys about this. It might not be benefiting your investment portfolio. You may not choose there, but for goodness sakes, go and make sure that when you are old and grey and fabulous and sitting here at Echo Beach, down here enjoying your life, then you can actually hear what's happening around you. It's really, really important.
Yeah, thanks for that. And can I just say, don't wait till you're 72, right?
No.
It's affecting us all,
Yeah.
and there is that cognitive decline.
Yeah, I
so-
got my first pair, I was just saying, at 50, so I'm upwards of that now, but then they're great. They're quite life-changing. But that's a $9,000 pair of hearing aids, which don't deliver what those ones there deliver. And I've actually lost one pair of these surfing because I forgot about them rolling down at the beach. That was a bit unfortunate, wasn't it? $500 is far easier to replace. Okay, we are going back to one of our mega trends. We're going into mining. And subject, well, having a look at the technology, the emerging technology, and the difference that can make to some of our gold and our base metals discoveries around Australia. And Musgraves is, have I got it right? I have Musgrave. I was say, you guys are, sorry, Rob. So Rob's coming up to join us on stage. He's the MD from Musgraves. And some of this emerging technology has meant huge things for yourselves, and you're going to extrapolate upon that now. Would you please make him very welcome?
Thanks, Chrissy. Thanks also to Vertical Fence and Stu and Jax for putting this on. Great to be down here in the southwest. So 3 key points for us. We're systematically growing our resource base. The gold. We have a strong joint venture with Evolution as well over part of our ground. And we've commenced pre-feasibility level studies over 2 of our deposits, Break of Day and Lena. We're sitting at around the market cap of about 200 million. You can see there too, we've got over $19 million cash in the bank, so we're very well funded. And we're just seeing a little bit of an uptick in share price recently, a good trend in the gold space, and a bit more M&A happening in the sector. A strong board, been together for a while, and we've just added Brett Lambert as an engineering director on the board as well in recent months. Our focus is on the Q project, so we're halfway between Mount Magnet and Meekatharra, and as I mentioned, gold. So we're right on that Great Northern Highway leading up to the Pilbara. Most deposits, as you're probably well aware in Australia, in gold space, are either high grade and deep, or they're low grade and shallow near surface. We're quite unique. We're high grade and we're near surface. So that puts us in a really good position. We're a modest size, but we're growing and we're continuing to learn as we make new discoveries. So we made a new starlight discovery in recent times in the last year, 14 metres at 190 grams, only 4 metres below surface, covered by a thin hard pan cover. So it's a consolidated clay that's transported. We're in a really good region. And we think we can make some new discoveries, as I'll take you through. We utilise magnetics, gravity, geochemistry, and electrical geophysics in our integrated targeting. This is a gravity map. We've identified a number of parallel shear zones that are hosting the gold mineralisation. We've got multiple drilling programs underway. As I mentioned, we're very high grade. Got a number of regional targets. And we've got more than 20,000 metres of RC drilling happening at the moment. We'll have a 9,000 metre air core program starting in a few weeks, and a diamond drilling program to follow that. And on top of that, we're also managing the Evolution joint venture component of what we're doing as well, in conjunction with Evolution. So at the moment, we're focusing on the 100% Musgrave ground. Just south of our new discoveries at Break of Day, we've got hit a new a position at White Light, very high grade again, very close to surface. You can see those grades there, 40 grams, 19 grams, 107 grams. The average underground mining grade in Australia is roughly around 4.5, and the average open cut mining grade in Australia is about 1 gram gold. On a regional sense, we've got 2 major shear zones. One on the right-hand side of the image, running through that Lena Break of Day white heat zone, and the other denoted in yellow, across to the west, running north-south, and only about 1 kilometre to the west. We've got about 7 kilometres of strike on that new zone, and we've just hit an intersection this morning, very high grade gold, 28 metres at nearly 36 grams at 49 metres down, and coarse nuggety gold in the sample. Some of that gold is the most I've ever seen in an RC sample in a regional broad space drilling program. That 1 metre sample with those nuggets and golden quartz was running at 898 grams per tonne. And that's the location of the drill hole there. It's the central one. In there you can see in that group, it's this one in the centre here. There's a metre at 898 within the whole interval of 28 metres at 36 grams. We're very close to surface. We think it'll extend up closer to surface. And we've also got a new position that we've identified that's just off to the east, only about 50 metres, in this dolerite, in this green unit here, which is, again, really exciting. So this overall strike of this particular prospect is about 2.6 kilometres. So there's a lot of drilling to go. We've got 50 holes in the lab at the moment on this particular prospect alone. And this is this new area that we're just identified in the last couple of days. It's this area out here. It's coming together. We're getting mineralisation in the dolerite, which is the green unit, and the felsic units are the orange, and around that contact between the two different rock types. And this is exciting for us. It brings in new opportunities. We think we've got about 5 kilometres of strike here that we haven't yet tested, and we're looking forward to being able to test that over the next coming months. The intent is really to get a resource wrapped around this new prospect at Big Sky by Q2 next year. I won't read out all those assays, but you can see them there, and a lot of drilling still, as I mentioned, underway at the moment and at the lab. Our gold recoveries are really good in the area we're working. In 96 to 99% recovery in the met test work we've done to date, high gravity component recoveries. We can pan the gold. You can see great gold tails in the pan here with some coarse nuggets as well. It's pretty standard. So this is very standard in the Yilgarn. There's nothing deleterious or nothing negative in these samples. We're in an area that has a lot of infrastructure. So we're in the purple. That's Musgrave's ground. Just to the south of us, 40 Ks, Ramelius have their operation at Mount Magnet. 40 Ks to the north, we have the Tuckabianna mill, which is run by Westgold, and Westgold have another mill further north at Bluebird. And we've got Gascoyne just out to the west. They're in a bit of a stoush at the moment with Westgold. We also have Stilts Lake in the district as well. So there's lots of activity around us. We know we can move gold, especially high grade, a long way on the Yilgarn. Ramelius move the Vivian dirt at 6 grams, 300 kilometres to get it into the mill at Mount Magnet. We're only sitting, the deposits we have at Break of Day and Lena, at Kira, only about 3 Ks off the highway. We also have a really strong joint venture with Evolution. So the areas that we've been looking at to date in this presentation are the areas in green on the image, and the areas in yellow in between under the Salt Lake are in joint venture with Evolution, and some fantastic results we've been getting in that joint venture as well. We had 68 metres at 1.5 grams below the Salt Lake cover, and we're just drilling to test the fresh rock basement below that at the moment. So we have a really strong relationship with Evolution. We're continuing that, and at the same time, we're doing our 100% ground and 100% work on our own ground. Evolution have 2 programs at the moment. They've just committed to another $5 million over the next year, doing 7,000 metres of diamond and 17,000 metres of air core. So our total drilling expectations for the next 12 months are between 70 and 90,000 metres of drilling. As I mentioned, the Evolution joint venture, you can see there we've got a Salt Lake cover over here. This is just clay. And then we're into regolith or clay gold. And then we're testing the fresh rock beneath that. And again, this is a dolerite host. So it's one of the most prolific host rocks for hosting the biggest gold deposits in the Yilgarn in WA. We think we've got multiple lodes. These yellow lines are individual quartz lodes, all running parallel to each other, all separated by about 30 or 40 metres. Evolution are involved with us in this joint venture over a 5-year period, initial 5-year period. They need to spend $18 million to get to a 75% equity in that joint venture. They have a target size of 2 to 3 million ounces. They want to find an operation that'll deliver 200,000 ounces a year times 10 years. We have a strong work schedule. We're doing resource upgrade drilling at some of our prospects at the moment to get them into resource categories. As I mentioned, Big Sky and White Heat. We've got new targets at target 14. We're also testing about 13 or 14 new targets that we've just developed around the Starlight area, which is a really high-grade deposit we found last year. We're looking forward to potentially finding some more of those, and we think there's lots of ability in this belt to do that. We've also got a regional air core program, as I mentioned, testing the dolerite on the contact of that Big Sky prospect. We're doing resource definition drilling and upgrading Break of Day and Lena. We have the Evolution joint venture, and we've got some pre-feas level studies happening as well. ESG, environment, social governance, is an important part of what we're doing. We're strong on rehab of what we're doing on the ground, making sure we try and put the place back the way we find it. We work with the local communities, Indigenous stakeholders, and people on the ground, and we really are trying to minimise that environmental impact. So the combination of existing resources, very high grade, good gold recoveries, fantastic infrastructure in our district, and importantly, the exploration upside are key criteria and key milestones for us going forward. Really results focused, especially on the exploration front, delivering resource upgrades in Q2 of 2022, and also progress the pre-feas studies on the deposits we have. So I'd say it's a good district to be in, it's a good environment to be in, and we're in a really solid gold price environment as far as Australia goes. Thanks very much, and we've got a booth, so come and talk to me anytime, and happy to answer any questions.
Rob, thank you. You threw me at the start there because I looked across and I saw 2 Robs and I got slightly confused. Would Rob number 2 like to come up and join us? So Rob number 1 from Musgraves and Rob number 2 coming up to join us on the stage. And we're talking Peel Mining now, and you guys have got a firm focus on copper, correct? All right.
Correct.
So you're going to take us out and we're going to talk copper. And you've got actually, what you have got, which is interesting, is a lot of your core assets are really close to one another, correct? So you've got the added advantage of this strategic hub, which I know you're going to talk to everyone about now. Would you please put your hands together, everyone, and welcome Rob number 2, Mr. Rob Tyson, Managing Director of Peel.
Thanks very much, Chrissy, and thanks to Canaccord and Vertical Events for hosting today. And it's great to tell the Peel story again. We're all about defining the next copper development story in the Cobar Basin, which is in central New South Wales. And look, we've got a lot of similarities to the other company before you, the other Rob. We're surrounded by great infrastructure and we're in an excellent jurisdiction for copper, which is a main commodity that we're interested in. So we've been around for a fair while now, about 14 years. We started with Greenfield's tenure, and essentially over the last decade or so, we've put together a number of discoveries in the one strategic area, the Cobar Basin. Look, we're very fortunate that our share register is dominated by Hampton Hill Mining. It's a gentleman by the name of Josh Pitt, essentially behind that company. And if you're not familiar with Josh, I recommend you have a look at his recent activity with a company called Red Hill Iron, and he's had tremendous success there. He knows value and he's been extremely supportive of our endeavours over the last decade. Beyond that, St Barbara have a significant stake, and they acquired that a few years ago, and we're certainly viewed, I think, amongst their growth options in the future. Directors' skin in the game, and Paradise Investments, the very well-regarded institutional investor, is substantial as well. We're still very tightly controlled, with around 60% of our register held in the top 20 holders. 4-man board, So myself and Jim Simpson are technical. I'm an exploration geologist background, and Jim is a mining engineering background. And Jim has come on board in the last 2 years and really speaks to our aspirations to become the next development company in the Cobar Basin. And his previous life was as managing director of our neighbouring company, Aurelia Metals, who are a production company in the Cobar Basin. So Cobar, look, it's one of Australia's great polymetallic jurisdictions. It's the richest part of the Lachlan Fold Belt in terms of polymetallic mineralisation, and really second only to Broken Hill in New South Wales in terms of metal endowment. And a lot of that metal has come out of 3 main mining centres, and you can see those deposits near Cobar, the Peak mine, which is predominantly gold, the CSA mine owned by Glencore, which is a copper mine and consistently ranks in the top sort of 10 high-grade copper mines in the world, and the Endeavour mine to the north, which recently went on care and maintenance after 37 years of continuous operation, which is a zinc lead silver deposit primarily. Our land holding position, we've got about 4,000 square kilometres, and we ventured to the south of Cobar around 10 years ago when there was plenty of ground available. And look, over the last 10 years, we've stitched together a dominant land position, and we've made 3 discoveries in that time, which speaks, I think, to the quality of our exploration, but certainly the quality of the rocks that we're actually exploring. So those discoveries in chronological order were Mallee Bull around 2011, 2012, which is a copper system. We then discovered Wirlong, which was under a joint venture at the time, around 2015, which is another copper system that we're active at the moment. And then Southern Nights, Waugh Tank, which is down to the south on our tenure, and that's a zinc lead silver rich system. We have another deposit, Mayday, in the mix, which is an open pittable sort of resource, or sitting in an open pit, I should say, gold rich, but certainly polymetallic. And all of these deposits in the Cobar Basin essentially comprise 5 metals: copper, lead, zinc, silver, and gold. It's really just the ratios of those metals that vary. The Kidman Way runs straight through our tenure north-south, and it's essentially an outback highway. The Barrier Highway runs east-west. It's obviously a national highway, transnational highway. There's railway infrastructure running up to Cobar. And then we've got the Moomba to Sydney gas pipeline running through our tenure as well. So it's a great place to work in New South Wales. Certainly, as I said, the rocks are very, very kind and well endowed. But from a practical, logistical perspective of doing work on the ground and getting around, it's an easy part of the world to work in. So we enjoy our time there. Copper is, as I said, is something we're very keen to focus on. And the reasons are really very self-evident. There's not enough being discovered to replace what we're consuming on a global basis. And essentially, one of 2 things sort of had to happen. Either more copper had to be discovered to fill the supply line, or the price had to move upwards, which is what we've seen over the last 12 months, essentially. And we believe that price move is going to be sustained. The fundamentals underpinning copper are fantastic, and we're heading towards a net zero target of 2050 now. So we're going to need a lot more copper to make that possible. Our strategy is all about copper first. So amongst our multiple deposits, we're focused primarily on Wirlong and Mallee Bull. Our metal exposure around 18 months ago was primarily towards zinc. However, we bought out 1 joint venture, and another joint venture fell back to us. And that falling back to us led to our exposure becoming primarily copper focused. So we are now primarily exposed towards copper, and at the moment we're drilling at our Wirlong deposit for maiden resource, and we hope that our exposure will increase to more like 50% of our metal exposure. So this is what our resources look like at the moment. So we've got just under 13 million tonnes of global resources, most of our copper tied up in Mallee Bull. We're drilling for maiden resources, I said, at Wirlong at the moment, and we will be handing down a maiden resource there in the next 2 to 4 weeks. And that will increase our global resource base, but it's primarily copper, so we'll be adding more copper to our asset base. So the copper first processing hub concept. So essentially, within our tenure, we can vision that putting a mill somewhere near Mallee Bull would make sense. It's the centre of gravity to our tenements and to our resource base. And with the copper first strategy, essentially a copper mill to start life is the way we're seeing things. But all of those deposits in due course feeding into that mill infrastructure to supply us really with mine life. So we're aiming for sort of an 8-year mine life and hopefully a run rate of around 1 million tonnes per annum. We've drilled out Southern Nights to a reasonable degree. We have some easy targets there that we'd like to follow up, but we're focused on drilling at the moment at Mallee Bull and Wirlong, where we're drilling with 2 rigs at each deposit. The copper first processing concept. So the mill that you just saw there a moment ago is a full polymetallic mill, which is essentially what they have up at the Peak mine, our neighbour that are Aurelia Metals owns. The copper first strategy is a simpler mill. It's a lower capital concept, and it should be a lower processing sort of concept as well in terms of cost. So it's something we're very keen to pursue. We've also been looking at ore sorting as potential technology that we can utilise to upgrade our ore to increase the value essentially that can be created out of this mill concept. And GR Engineering have been helping us with this mill design work. So Wirlong is where we're drilling at the moment. We released some results this morning, which are our best results to date out of Wirlong. We've been drilling since earlier this year for a maiden resource. Lots of diamond drilling. That's a style of drilling you kind of need in the Cobar Basin because of the vertical nature of these deposits. But we see it as an analogous to the CSA mine in both a geological and structural setting. The copper mineralisation does come close to surface. It sits underneath a hill, but we've pinged it down to at least 600 metres below surface. And the mineralisation we reported today is around 500 metres below surface, and it's certainly the best intercept we've seen there to date. We've done some metallurgical test work and ore sorting test work that shows it's highly amenable to flotation and ore sorting technology. So we've been able to easily produce a 32% copper concentrate, which is about as good as you can get for chalcopyrite ore, and got very high recoveries of that metal. So pending resource estimate at the moment, this is a long section through the western lens, as we term it. It's essentially one lens out of a number of lenses that exist at the Wirlong deposit. And the results you can see there, obviously starting from the shallower levels, going down to the deeper levels. And the last 3 intercepts today were included in a 205 metre intercept at 1.4% copper, which sits on the southeastern corner of that long section, which is probably a bit hard to see, but sits about there. So we believe it's open along strike and down plunge possibly. So we've got more drilling to do in that part of the system. Very encouraging results, but we're aiming to release a maiden resource, as I said, in the next couple of weeks, 2 to 4 weeks. So Wirlong's one part of the copper first strategy, and I should show this one. This is magnetics below Wirlong, and look, I have fixed the spelling of elephant this time, which is good to see. But I see an elephant when I look at that image. So who knows what's below, and CSA as an example, they're mining at around 1,800 metres below surface these days. So we were only drilling to sort of 500-600 metres below surface at the moment. So we think there's huge potential to this system in the future. Mallee Bull is the other part of our copper first strategy, and Mallee Bull, as I mentioned, was discovered around 9 years ago. We've got a a resource there of just under 7 million tonnes at just under 2% copper. At the moment, only around 20% of that resource is in the indicated classification. So we've got 2 rigs going here. They've been going since mid-year, and they're infilling the resource system here. So we're aiming to convert as much of that inferred resource to indicated, and we're hoping to hand that down around year end. These are some of the resource infill drill results that we've put out to date, and there's quite a lot more results pending, but they are some of the best copper results you'll find in Australia being reported at the moment, and they certainly give us a lot of confidence that this deposit's going to be a mine. Southern Nights and Waugh Tank. So Waugh Tank was an historic prospect from the 70s and essentially was land banked from the late 80s with no drilling, and we picked it up from MMG in 2016, and we made the Southern Nights discovery around 1 kilometre to the south of Waugh Tank, and we've put together a 5 million tonne resource there. That's around 2/3 indicated classification. This system is open along strike and down dip. It's part of our mine life plan for some of the parts of our South Cobar project, but it's got some low-hanging fruit, and we'd like to do some infill drilling to upgrade this resource, and there's still a huge amount of exploration upside to this deposit. So our forward program looks a bit like this. We've got more drilling at Wirlong and Mallee Bull to take place, resource estimations to take place, scoping first quarter next year, feasibility study over the back end of next year. And that's Peel Mining. We're nothing without our team. New South Wales has certainly been challenging over the last 12 months or so, and particularly the last 3, 4. And these are the guys on the ground doing the hard work, and I have a lot of respect for them and their efforts. And you know, a lot of them have spent considerable time away from family and friends during the lockdown periods and opted to stay on site. So my appreciation to them and also to you for listening today. And thanks, Chrissy.
Thanks, Rob. Rob Tyson, Peel Mining. I'd be interested to see, Rob, if you went to see the psychiatrist and he showed you all those ink blots, what you make out of them if you got the elephant out of the other one up there. That was good. We're going to move on to transformative tech and health and wellness now, which were megatrends 1 and 3 from our early talk this morning. ResApp is a leading digital health company developing smartphone applications for the diagnosis and management of respiratory diseases, including the instant diagnosis of COVID. How? ResApp's machine learning algorithms use sound to diagnose and measure the severity of respiratory conditions, and at first glance, the potential sounds huge. The man up here is Executive Director and also founder, Mr. Brian Leedman. I'm sure he will fill us in with all of the details. Would you please make him very, very welcome?
Thank you, Chrissy, and thanks to Canaccord and Vertical Events for putting on such a spectacular show. This is a change for all of you in terms of it's not a mining company, it's, as she says, very much a health tech company. And I'm sure you've all watched with great interest the, forward here. How am I going to move forward, guys? I'm pressing it. Oh, there we go. Okay. So you might recall William Shatner was rocketed off to space recently. And for many of you, that's their favorite character from the original Star Trek series. But I actually had my favorite character was someone else whose name was Dr. Bones McCoy. He was played by an actor by the name of DeForest Kelly. And Bones McCoy had a gadget called a tricorder. And you could scan it over a person's body, and it might be an alien, diagnose that you've got an alien growing inside your belly, or you've only got 10 minutes to live, or whatever it was. I thought, what an amazing thing, this tricorder. And in reality, we actually now have a tricorder. And the tricorder, pressing, doesn't want to work. Right, okay. So the tricorder is a digital technology, and we've actually got that with a smartphone. So the smartphone can do amazing things. And ResApp Health was the very first company to actually list on the stock exchange as a truly digital healthcare company. And we've actually got 3 products now. ResApp DX, which is actually using signatures and the sound of a cough to diagnose respiratory disease using a smartphone. And it could also be able to diagnose things like sleep apnea by measuring the snoring that you do while you're sleeping. So that is ResApp CC. And ResApp CC is about the cough counting, and Sleep Check is about sleep apnea, which is what you can put on your phone on the bedside table and replace a polysomnography test. So these are the three key products that ResApp is commercializing right now. Can we go back? This button's been very sticky. Okay, so we are a leader in audio-based diagnosis of respiratory health. We're using machine learning algorithms to actually analyze the snoring or the coughing sounds that your body's producing. And these algorithms have been clinically tested in extensive clinical trials. We've actually got multiple regulatory approvals in Europe and Australia and across Asia, and we're commercializing these technologies right now. So respiratory health is a large addressable market. This is the most common reason for anyone to go to see a doctor. It's actually a huge market for people to use in telehealth, because if you're going to use a diagnosis for respiratory disease, then you're going to use a stethoscope. But they can't use a stethoscope in a telehealth setting. So that's where this technology, which is downloadable on a smartphone, can actually do the work for the doctor, provide that diagnosis, and then they can give you a treatment plan going forward. So that is a massive addressable market, and it's usually through upper respiratory tract infection or lower respiratory tract infection. We can distinguish that and actually be specific to the types of diseases they are. I'm not sure why this does this. Maybe Shane, you can move it to the next slide for me. Excellent. So healthcare is going digital. Telehealth is the fastest growing area of healthcare. You can see there's massive addressable markets. There's a huge consumer demand, and actually reduces the cost of healthcare. And you've got reimbursement from the health insurance companies in terms of covering the cost of these use of technologies, because it does actually work for the healthcare system and reduces the cost of healthcare overall. This one doesn't want to work at all, Shane. Here we go. So COVID-19 has changed things for us. It's clearly put a lot of focus on telehealth. I'm sure a few years ago, none of you in the room would have even heard of telehealth. So we've seen COVID-19 because of people going into the surgeries and waiting rooms and not wanting to spread the illness. Telehealth is being adopted more widely. There are some huge companies that are growing in this space. You've got Ping An in China. They're actually seeing 1.1 billion consultations per annum. That's just an enormous number. In the UK, the NHS has got behind it. In Australia, we've got a bunch of different telehealth companies that have come on board, Doctors on Demand, and so forth. So this is a big growing market. And of course, as I mentioned, half of the telehealth consultations have to be respiratory, because that's the most common reason to actually diagnose respiratory disease. And of course, you can't use a stethoscope. So why we win in telehealth? Well, we reduce the costs, we reduce in-person visits, it's easy, it's convenient, and it's obviously we've had to get clinical evidence to demonstrate that it works, and to get regulatory approval. This is not easy, but to get regulatory approval means it does work. And so all you have to do is cough and you get a diagnosis. So if you cough, you can put in some basic details, just like what a doctor would normally do. When you see a doctor, they ask you questions and so forth. You put in your date of birth. You have to say whether you're male or female. They want to see any particular illness, expressions of illness that you've had in recent times. And then it actually gives you a diagnosis. So in this case, it's lower respiratory tract disease, in which specifically is pneumonia. So all you have to do is cough. This technology is actually being used in telehealth through our various licensing partners in Europe and across in Australia and also in Asia. So we are actually generating funds, revenues from this right now. So we're building partnerships to drive global adoption. CoView, Phoenix, Doctors on Demand, and WMA are partners in Australia. Medgate is the largest telehealth provider in Europe. They're based in Switzerland. We recently signed a deal with Doctor Indonesia. So that's actually going to start being used on the 1st of December, and also Nuheara Health in Africa. So COVID-19 is a huge commercial opportunity. Look, I founded the company. I was on the board. I left the company after a couple of years. I came back only about 3 or 4 months ago. I did this specifically to commercialize this technology. So using signatures in the sound and cough to diagnose COVID-19 is the most tremendous commercial opportunity I could ever conceive of. And our technology is perfect to commercialize in this space because COVID is in the lungs. Now, the difficulty we've had in going down this path is actually getting patients to participate in that study, because you've got all kinds of safety issues around coughing and collecting that sound of a cough with other people around and so forth. So it's been a real difficult exercise. We've overcome that. We've got a partner now in the US with a company called Phosphorus. They're recruiting patients for us right now. We made an announcement yesterday in respect to having now surpassed 100 positive cases in India. That's a key study for us. So all we really need is patients who cough and then subsequently diagnosed with COVID-19. Now, currently, if you're getting a COVID-19 test, you have to do a PCR test, which you might get in a day or two result. It's expensive, but that's the standard, 100% accurate. That's what we're comparing our cough diagnostic to. Okay, so that's the standard. Now, what's happening right now is this massive influx of rapid antigen testing. You've all seen it in the news. Rapid antigen testing is about 70% accurate. And that's only if you're symptomatic. If you're asymptomatic, it's 58% accurate. And it's a bit like a pregnancy test. It's not straight away. You still have to mix it with a chemical, wait for the color to change and so forth. I'm talking cough, cough, instant diagnosis of COVID-19. Imagine the commercial possibilities of a technology such as that. Only ResApp can do this. We're the only company that's ever taken cough diagnosis on a smartphone and actually got regulatory approval for it. Pneumonia, asthma, bronchitis, COPD, upper respiratory tract infection, lower respiratory tract infection, COVID-19 too. That's what's coming. So for any investors in the room, that's what you're investing in here. That's the commercial possibilities. Imagine an Australian company taking on the world with this sort of technology. So we're going to have a lot of news flow going forward, and we expect to get a result on this by the end of this calendar year. So unlocking the potential to improve chronic disease management. We can also not only diagnose respiratory disease, we can manage respiratory disease. So you can actually follow the patients over a period of time. For those, say, who've got asthma and COPD, you can manage how the disease progression is happening with the treatment. So that's very interesting to big pharmaceutical companies that are developing treatments for these various illnesses. And we have partnerships in that too. There we go. So cough counting is part of that. We can actually, if you're coughing and you've got other people talking around, the technology can actually determine the cough versus all the other background noise. So we've actually partnered with AstraZeneca, one of the biggest pharmaceutical companies in the world, who've actually licensed in this technology and using it in their clinical studies for their respiratory treatments. Now, sleep check is another big one for us. This is something that I was really excited about, because if you think about sleep apnea is a huge illness, and so we've actually taken this technology and got regulatory approval for it. Let me show you how it works. So it's the most common sleep breathing disorder, and it's significantly undiagnosed. So you've got 3 in 10 men and 2 in 10 women that have sleep apnea. But 80% of them don't even know they have it. Imagine what the commercial possibilities of a product where you simply put the phone on the bedside table and you put it on and you wake up in the morning and it'll tell you if you've got sleep apnea. Now, this lady here, she's all wired up. I actually did this myself. I'm not a snorer and I don't have sleep apnea, but I wanted to go to the hospital to actually see what it was like. And it was really horrible. And I'm sure many people in the room have actually done a polysomnography test. But With our technology, which is now regulatory approved and is now also being commercialized, you can download this on the App Store right now. All you have to do is put the phone on the bedside table, turn it on, and you wake up and it will tell you whether or not you've got sleep apnea. So that replaces effectively what this lady is going through, is having to spend the night in a sleep study clinic at a hospital. So it's a tremendous technology, and it's a wonderful adoption or change from what ResApp was set out to do in terms of cough diagnostic for respiratory disease, and then finding a new application for it in sleep apnea. So I'm coming towards the end of my presentations. We've got a number of near-term growth drivers. So we've also developed a handheld device, which we can use in hospitals, specifically rather than a smartphone, it's a specific piece of kit. We're waiting for CE mark on that, which is going to happen very soon. We're completing recruitment for the COVID-19 studies. That's going to happen very, very shortly in terms of this year. And it's going to be one that very hotly anticipated by the media and by investors as a whole, because this is a huge market for everyone. Sleep Check is awaiting a regulatory approval in the US. It's already approved in Europe and Australia. So in the US, when we get approval for that, that's going to unlock huge revenue potential for us as well. Medgate, our telehealth partner in Europe, is expanding the rollout. Hello Doctor in Indonesia, what a massive market opportunity that is for us. Doctors in Demand in Australia is also about to go live. Telehealth is clearly a revenue driver for us, and we have near-term revenue from the cough counting technologies, partnership with AstraZeneca, and Sleep Check licensing opportunities, be it with ResMed or Philips, the manufacturers of CPAP machines. And just a corporate snapshot, a market cap about $55 million. We've got a great team of board of directors. And you might note here that Fidelity International is the largest shareholder of the company. They're a tremendous international investment fund, the largest investment fund on the planet. They own 10% of the company. So they clearly have backed us and see great potential in it. The company's actually was founded here in Perth, or not in Perth, but not in Busselton, but founded here in WA. And the company is now based in Brisbane. We've got a great team of people. If I could show them to you. There we go. So we've got a great leadership team. I'm here for the next couple of days. I'd love to talk to you more about ResApp. And it's got tremendous growth from here, and I appreciate your time. Thank you.
Well, it certainly does. You had a lot of people nodding along down there in the audience here. I see a lot of potential for that one. And my apologies for whatever the heck is happening with that little bit of tech there. It did remind me, though, we had a couple of mobile phones going off during that session, and that's completely on my bat as well. If you can just remember to pop them onto silent, or at the very least vibrate, that would possibly be a very good idea. And Kay did remind me of that earlier on today. Scott Williamson, Blackstone Minerals, are you hiding it on the side there? Okay, Scott, let's see how you go with the clicker today. You've got a lot to get through today with your presentation. We're going to have a look at activities developing the Teakoa Nickel Copper PGE project, in Vietnam, and also that Gold Bridge project, cobalt and gold over in Canada. Would you please make Scott very welcome, everyone?
Thanks, Chrissy. Thanks to Vertical Events and Canaccord. What a great location for a conference. And thanks for everyone for coming along today. We are doing a talk about our Teakoa Nickel Sulphide District in northern Vietnam. You can see there we've got a previously operating mine. It operated between 2013 and 2016, and the nickel price was much lower than it is today. We're going to turn the mine back on, but we're going to build a downstream nickel refining business and produce the first stage of the lithium-ion battery, which is called a nickel cobalt manganese precursor product. Not a good start with the clicker. And that's a waste of a slide there. We do have this district scale nickel sulphide opportunity. We believe we could have a world-class nickel sulphide district. We are going to take it downstream into that downstream product, which is the first stage of the lithium-ion battery. You can see there's a large demand coming for a high nickel cathode. So the initial lithium-ion battery had a ratio of nickel cobalt manganese of 1:1. There's a movement towards an 8:1 ratio. That's the product we're looking to produce from our downstream business. The downstream is very scalable and modular. We will scale this up because of the demand that's coming. You can see we need 1.5 million tonnes per annum as an industry. That's currently more than the world's supply of Class 1 nickel, and we need to find and develop and build a large, I suppose, big challenge for the industry coming to produce that sort of metal. You can see here, these are the major players. We're looking to be in the top 5, around the same scale as BHP and Glencore. The Norilsk out of Russia, they're the largest player. They do about 250,000 tonnes per annum. And you can see there that that's nowhere near the demand that's coming from the lithium-ion battery. So we need 1.5 million tonnes per annum. So yeah, there's a lot of work there as an industry to feed into this demand that's coming. You can see there the movement towards that NCM 811 ratio. By 2030, that'll be the dominant chemistry mix. So that it's all about the long range that you get from nickel, and range anxiety is what's driving this high nickel cathode. We're well positioned in northern Vietnam. You can see the major players in this industry are the South Korean, Japanese, and the Chinese. We've focused most of our efforts on South Korea, and now we're getting a lot of interest out of Japan. And most of those groups we're already talking to. We also have EcoPro. They're the largest cathode manufacturer in the world out of South Korea. They're our major shareholder and our first partner. We believe there's room for multiple partners, and we're going to build a consortium of joint venture partners for this downstream business. The focus of our products is the fact that we can do it cleaner and greener than anyone else in the market. The industry is built on tired and dirty infrastructure that's set up for the stainless steel industry. We have an opportunity to do this clean and green from day one. That we're aiming for net zero from the start of this operation. Our peers are looking at net zero by 2050, so they're up against it. They've got tired, dirty infrastructure. We can do this because we've got the 2 of the largest hydroelectric power plants on our doorstep and just near the mine. So we're already hooked into that hydroelectric power. We're using electric mining equipment, both for underground and open pit mining. We're going to use the pressure oxidation process, which is much cleaner and greener than the pyromet technology, which is used in the stainless steel industry. Well funded at the moment. The share price has gone for a bit of a run, but the price targets of those analysts are much higher than today's prices. I think today we closed at around 70 cents. The analysts are saying between $1 and $1.90. So you can see some very credible analysts there. I think Canaccord might have the lowest price target, so we won't talk too much about Canaccord today. But you can see there, yeah, there's some great names there and some good, real independent analysis. We also have Fidelity as a major shareholder, and EcoPro, they're the largest cathode manufacturer in the world, and Deutsche Balaton out of Germany has been a very supportive shareholder. So we've got some really strong institutional support, board of management with 12%. You can see the board management team. We have Mr. Jung, he's the representative of EcoPro. We've also brought in Alison Gaines recently. She's a corporate governance expert, and that's really, I suppose, driven that focus on highest level ESG compliance. And the three amigos on the left is we're the, I suppose, founders. Hamish and Andrew were the founders. I came in a little bit after, and our backgrounds in technical and corporate. So you can see here, there's two parts of our business. We have the upstream, which is the mine level, which is previously operating mine. We'll talk about that. But we'll focus really today on the downstream business. That's where the money is going to be made. That's where we're going to bring in the funding from the downstream partners. At the upstream level, we're also working with Trafigura as a feedstock partner, and we're looking at other future assets that we could potentially bring into this downstream refining business. So you can see there, we're going to take the concentrate from our mine and the third-party feed providers like Trafigura and other opportunities, and we're going to convert that concentrate into the precursor NCM 811 product. That's the first stage of the lithium-ion battery. And as long as we can find concentrate from around the world, we'll source it from Australia, Canada, Africa, South America, bring it into Vietnam, the lowest cost jurisdiction we've ever operated in, use that clean green power and upgrade it into that final product for the lithium-ion battery. That's the first stage of the process to a battery, so you add lithium to that NCM 811 product and you have a cathode, and you add the anode to the cathode to produce a battery. So at the upstream level, we're just delineating the ore bodies. We have 25 targets. Of those 25, the first 5 have become mines. So we have 3 underground mines and 2 open pit mines from those first 5 targets, and another 20 targets to come. That'll all come out in the coming weeks. So we have maiden resources, updated resources in the next few weeks, and then we're going to push all that into our pre-feasibility study phase by the end of the year. And then we start that bankable study and restart of the concentrator, producing concentrate from our mine in 2024 to feed into our downstream business. You can see there, this is our district scale nickel sulfide opportunity. They're the first 5 targets. Ban Phuc and Ban Kwa are the open pit opportunities. King Snake, Ban Chang and Ta Kung are the undergrounds. So the undergrounds are massive sulfide, high grade, narrow vein underground mines. The disseminated are large scale, open pit, large tonnage, bulk tonnage, low strip ratios. This is Ban Phuc. It's 280,000 tonnes of nickel there. Very similar to Mount Keith in Western Australia. Mount Keith is around 0.5% nickel. We have a similar grade of nickel, but we've got all those byproducts as well. Platinum, palladium, all the precious metals, platinum group elements, but also copper and cobalt. This is one of our other open pit opportunities. So this will be our second open pit mine. This will add mine life. This is one of our underground mines. So these are the high grade, narrow vein, massive sulfide undergrounds. They also have these broader disseminated halos, which also have those strong byproduct credits. So for instance, we have 1 gram per tonne in the precious metals, and we have 1% of copper in these ore bodies. So very high grade credits, and but the nickel also very high grade in those massive sulfide veins. This one's King Snake. So this is another underground, narrow vein underground mining opportunity. So you can see there we have another 20 targets to test. The first 5 are mines, so 100% hit rate on those on the drilling. And we have, we believe that we've got another 10 to 20 years of mining here at that Ta Kung nickel sulfide district. We've recently announced this collaboration with the Vietnamese government. The previous owners, for some reason, left this target out of the tenure. So we've gone to the government and said, can we have a look at Chim Van? Chim Van is 15 times the size of Ban Phuc. Ban Phuc is the first 10 years of the mine, and we've got a large scale mag feature 10 kilometres away, and we're calling the Big Bertha, because that is a very large target, and very excited around this collaboration we have with the Vietnamese government to potentially bring that into our exploration licence over the coming months. So just in summary, we have 2 types of ore bodies feeding in from our Ta Kung district. We have the disseminated sulfide and the massive sulfide veins. The disseminators are the big open pits, and the massive sulfide veins are the small high-grade undergrounds. We top it up with our friends from Trafigura. They'll bring concentrate from all around the world into this clean and green refinery, and also other third-party feed providers. So other nickel miners out there that are not in offtake, we can work with them and bring their nickel into this refinery as well. So at the refining level of the downstream business, these are the highlights of our recent pre-feasibility study. We have strong return on investment, $2 billion NPV at a very conservative pricing model. If we use today's pricing, that's $3.5 billion for a $491 million capex. So very strong return on investment on this downstream business. Very well located in this northern Vietnam region. Have a look, keep an eye on that logo down there, the big V. It's not the Victorians. This is the Vietnamese VinFast. They are Vietnam's answer to Tesla, and they're looking at a $60 billion IPO on the NASDAQ. So they're producing electric vehicles today, coming off the factory floor today, down the road from this nickel mine. So you can assume that we're talking to VinFast because they need a lot of nickel for their electric vehicles. This downstream business is built on this chart, basically. We can buy nickel concentrate from our mine at arm's length and other third-party feed providers at 75% or a 25% discount to the LME nickel price. We convert it into NCM 811. That trades at a 120 to 140% payability. We're effectively doubling the value of the nickel by combining it with cobalt and manganese in that ratio of 8:1:1. And we're doing it through tried and tested technology. It's a pressure oxidation process, a solvent extraction process. These are technologies we've been using in the mining industry since the 1960s. So there's nothing new or novel about this flow sheet. We do have some good byproducts. Kieserite, that's a fertilizer product. So that's a green fertilizer product. Copper cathode, obviously, and the precious metals. We're also looking at replacing the oxygen plant with an electrolyzer, which would produce green hydrogen as a byproduct. Very excited about this flow sheet, and there's been a lot of good work behind this flow sheet over the previous months. So just on the economics, so the economics are driven by the premium that we get for the NCM 811 product and the payability or the discount that we can purchase nickel at in that concentrate form. So you can see there, as that premium moves around, as does the MPV. If you're using today's premium, which is 40%, it's a $3.5 billion MPV. So you can see that premium has traded between 20 and 40% since it's been recorded. We've conservatively used 20% as our base case, and that's a $2 billion MPV. We're confident that premium will continue because of that strong demand that's coming from the lithium-ion battery. Because of that strong premium, combined with the low operating cost environment and the hydroelectric power, we can pay a little bit extra for our concentrate. So any concentrate that's in the market, we can see here, we pay 5 or 10% above market rate, and we're still driving very strong MPVs in the order of $3 billion. So just in summary, we've completed the pre-feasibility study. We've just engaged Wood. They're the biggest name in hydromet. We've started the pilot plant phase. The next 12 months is about de-risking this from a technical and a funding perspective. We'll bring in those big partners. They will fund this. We're not going to dilute the shareholders. Don't you worry. We're shareholders ourselves. We'll restart and build this refinery and produce our NCM 811 products in 2024. Thank you for your time.
Wow. That clicker obviously only playing games with Mr. Leedman, not with yourself. There you go. Hey, while I've got your attention for a second and you're going out to grab yourself a cup of coffee after Clayton has addressed you, make sure you have a chat with Laurie about that bottle of Mauritian rum that Jackson alluded to earlier, because that is up for grabs. It's worth around $80. Have a chat with him about it, because he got it originally as a 50th birthday present from a family member, and he fell in love with it. So he wants to share the joy with all of you. It's called Beach House Gold Special. It's a really nice looking bottle of rum. So slip your card in there and see if you can get it. All right, Mr. Dodds. Clayton Dodds joins us in his role as Executive Chairman of Podium Minerals before we break for afternoon tea today. Podium is an exploration and resources development company focused on platinum group metals, gold and nickel copper sulfides. Their core project is Park Reef, which is located in the Midwest here in Western Australia, who have been making the news in the last week or month, and I'm going to let you expand on that one. Would you please make Clayton very welcome?
Thank you, Chrissy, and thank you to your attendance today. A little bit about Podium. I'm going to cover the activities that we're doing at Parkes Reef and give you a little bit of an insight into what platinum group metals is about, because I'm sure most people, especially here in Western Australia, have heard of PGMs but know very little about it. And there's a simple reason behind that. We do not have in this country a pure platinum group metals producer. Just the disclaimer, which I'll run through. As far as Podium is concerned, as you see on that particular slide, recently we announced our upgrade inferred mineral resources, which came in at a very healthy 2.2 million ounces of what we refer to as 3 PGE, which is platinum, palladium and gold, and a very healthy 79,000 tons of copper, which is one of the credits that we have in that particular ore body. You'll also notice there that we've excluded 2 very important platinum group metals, which is rhodium and iridium. We haven't done enough sample work at this particular stage, but as you'll see in the presentation, especially rhodium, it features quite highly in our in our overall program. About 3 years ago, when we listed Podium, we developed, or our exploration geologists, an exploration target, as you can see there, of between 3 and 5.8 million ounces. That's down to 200 meters in depth, so just purely looking at an open pit scenario. Our resource today is only down to 100 meters, so the opportunity of doubling up when we start drilling below 100 meters to 200 meters is pretty well on the agenda. Effectively, what we've drilled the exploration target within about 10%. We've got a very active drill program coming up, which includes diamond work as far as infill drilling. A little bit about where we are. I think one of the other presenters was also in this region around Kew in the Midwest. Being in Western Australia, it has been a very easy task as far as conducting exploration programs is concerned, albeit with great difficulty in getting drill rigs. We own 100% of Parkes Reef. They're all granted mining leases. In order to get mining leases, you need native title agreements, which we signed a few years back. So our native title agreements cover exploration as well as mining. So it's something that's very important these days to get a very good relationship with the native title holders, which we do. We respect that position to the letter of the law. I think with recent activities by some of the big companies, it certainly made everybody stand up and do things by the letter of the law. So every drill program that we do is subject to clearance. We have monitors on behalf of the native title group pretty well there every day that we're on site. So it gives us a lot of comfort as well. As far as what we're targeting at Parkes Reef is both high grade and bulk tonnage, platinum group metals, plus gold, plus base metals, but mainly in the form of copper. The initial target is an open pit operation, and then as part of our overall studies, we will start looking at the underground potential. A little snapshot on the company itself. We got 300 million shares. We will have, I should say, 300 million shares on issue. That'll give us a market cap of around 90 million. We're currently in a capital raising mode, so at the end of it, we'll have $10 million on hand in cash and receivables. So we're very well funded as far as all the activities that we've got planned for the next 12 months. As you can see on that graph at the bottom, if we go back 12 months ago, we were, like so many companies in COVID in the doldrums, we were about 2 cents a share. We had a great run, which saw the share price rocket up to about 80 cents a share. That was pretty well at a time when commodity prices for PGMs were quite high. They've dropped off a little bit. We've come down to around about 30 cents a share. As far as predictions of the price of PGMs going forward, fundamentally very strong. So we see an uplift in prices going forward. As far as the board is concerned, as you can see on the right-hand side there, I sit there as executive chairman. We made a few important additions over the last 12 months. We've appointed Sam Rodder as the new CEO, so he will be the face of this company in the future. So this could well be the last time you see me at a mining conference. Sam is currently an executive of MMGs. He specializes in both open pit and underground operations. He's a young, very energetic, enthusiastic guy. So he's going to be a great addition to us. We've also included on the board Kathy Moises, and of course Canaccord will know Kathy. She was the analyst, mining analyst out of Melbourne. And very recently, I was delighted to have Rod Baxter join us. Rod's got a history in platinum, having worked with Anglo Platinum in a senior capacity some years back. And as part of the new capital raising that we've done, Rod's company has contributed $2 million to that. So it's been a welcome investment on his behalf. As far as what we've done at Parkes Reef, you can see that particular graph. The red outline is the drilling that we've done. Now, Parkes Reef is 15 kilometers in length. It was discovered many years ago. What our plan has been over the last couple of years is to drill on 200-metre spacings the entire length of Parkes Reef, basically in the initial programs down to 100 metres, just to get an understanding of what the reef looks like and where along the reef we can intersect high-grade mineralisation. That particular map shows some of the high-grade hits that we've had. And I just want to highlight one area in the middle there, which has got a red dotted line around it. And you can see that the drilling's been a bit thin in that area. But what we recorded is some very high-grade results to the west, to the east. And we thought, well, the smartest thing here would be to infill the middle. But unfortunately, it's a registered archaeological site. So we were unable to drill on top of it. Our native title party said, no problems, go through a Section 18 clearance, which we're doing with their full support. But we did actually put a hole from some distance away from the north coming through underneath it, and again hit very high-grade mineralisation. So we're expecting approval for that during November, and we will have a drill rig in there to drill out that section. So if the high-grade mineralisation is there where we think it is, then that's probably going to be the first start for Podium going forward. And you can also see that we've got high-grade hits further to the east and also further to the west. The two blue dots there, and there is a third one just under the Section 18 area there. We commenced quite a deep diamond drill program on Sunday. There'll be 3 holes that we'll be drilling for 750 metres, and that is it's the first time diamond drilling has been instigated in this area. That will allow us to get a better feel for the geology, and it'll also give us the opportunity as to whether or not there is any parallel PGM reefs within this structure. So, as I mentioned earlier, the resource statement is out, 2.2 million ounces, 3 PGE, plus 79,000 tonnes of copper. I'll just mention a couple of those things now. We've got a pretty well a full program coming up. We're now very well funded. Drilling has recommenced. We also put down about 12 holes recently below 100 metres. And again, we've intersected the reef in mineralisation. We now need to extend that right along the full 15 kilometres with a view of getting a resource to match our exploration target, really just a fraction under 6 million ounces. So this, by any stretch of the imagination, is not small. And I'll just show you what costs we're expecting. The map on the right just shows some of the geophysics, and it's very easy to see where Parkes Reef lies on the contact between the mafic and the ultramafic. As far as platinum is concerned, again, not too many people know anything about it, but there's the traditional uses of technology, very big in the automotive industry and in auto catalysts, you know, from a pollution point of view and emission control, jewelry, industrial, computers, etc., investment. But I want to just highlight the 3 at the bottom there. One, batteries. It was mentioned a moment ago about lithium-ion batteries. There's a lot of technology that's being created at the moment, and platinum is being looked at very seriously, mainly by Anglo Platinum, as an enhancement for lithium-ion batteries. If that works out to perfection, there's going to be a massive market in that area going forward. As an alternative to battery power, hydrogen, I think we heard from Canaccord's earlier this morning that hydrogen has all of a sudden come to the fore as an alternative source of energy going forward. At the big end of town, hydrogen production, especially green hydrogen, looking at getting hydrogen out of water through electrolysis, it needs platinum as a catalyst, and that's a very big part of it. Hydrogen fuel cell vehicles, again, take the power with you. Just in a nutshell, a fuel cell electric vehicle uses 3 times the amount of platinum group metals than a normal combustion engine uses. So those 3 areas are the big growth areas for platinum and well, all PGMs going forward. What makes up an ounce, a PGM ounce? A lot of in the stock exchange had great difficulty with this. when you start trying to tell them what it's worth, but you've really got to look at what's called the basket price. On the left, you can see that we have a suite of platinum, palladium, and gold, making up that 1.54 grams per tonne of 3 PGE. Rhodium in particular represents about 3%. We can't put it into a resource calc at the moment, but we will do going forward. The important thing about it is when you look at the price. So if you look at our basket price, based on quite low PGM prices, comes in at $1,450 US an ounce. But if we include rhodium, it'll add another 35% to that. And iridium to a lesser extent. So that's quite a significant upside potential for our product. I mentioned about platinum just very quickly. Platinum and palladium are dominated by two countries in the world, South Africa and Russia. And I think the opportunity for a source of platinum outside of those two jurisdictions in a safe environment like Australia is fundamental. I mentioned rhodium, very important for us going forward. It's going to add 35 to 40% to our basket price. We will get around to doing all of the samples and bringing it into a resource calculation. To give you an idea, rhodium peaked at $29,000 an ounce this year. It's down around about 14,000 ounce at the moment. Very active drill program. It's drilling. We're doing metallurgical test work, which has been carried out by Core Technologies. We're for process design and a PFS quality flow sheet and mine optimization flowing through into a feasibility study. So we're well funded, got a very good resource, a very good exploration target, great infrastructure, and a very promising future. Thank you.
Clayton, thanks so much. Always really interesting to hear you speak and your reassuring voice as well. Right, we're going to have a break for afternoon tea. Make sure you check out those little giveaways that are out there. We might pull one out of the hat later on this afternoon. We have 7 more presentations to hear, and we will be veering away from mining for 2 of them. We're veering into the world of tech and iCloud. Are you okay, Jim? All right. Okay. I'll see you back here. We'll ring the bell in about 15.